and, you know, the market just opened, right? So for right now, we're just going to set the foundation, set the tone, look over everything, and, yeah. So what I highly recommend you guys do as viewers is two things, right? Two things that you guys, if you are a student, you've heard me say it multiple times, and I'm going to say it until the day I die, right? And that is, if you do not know what I am talking about, okay, take notes on it, right? Take notes on it, write your questions down and ask your questions in the chat, right? Is ask your questions, right? A closed mouth does not get fed, ladies and gentlemen. So if you are confused, or what I'm saying doesn't make sense, or if you think that I'm wrong, right, feel free to question me, or feel free to give your input in the chat, right? And I'm going to look at it. So with that, right, I'm going to assume that majority of the people on this call are students, already current students, right? So I kind of am going to assume that we're all at different levels when it comes to our intelligence, right, when it comes to trading. So I'm just going to do my best to explain everything in depth, right? So whether you are in the course or you are not in the course, let me switch screens here. Okay, you guys should be able to, let me make myself tinier, drag myself right here in the cute little corner. All right, get out of everyone's way. No one wants to see me, right? But what I will do is I'm going to put myself right here, right? Because this is optimal for streaming, or for clipping content, right? That's what we're going to be doing also, right? So we're going to put myself right here. Beautiful. Okay, and we got to take note of this. All right, so first thing that you guys should know, right, about how I trade and why I trade the way I trade, right? So, and as you go throughout my program, or you go throughout your own trading journey, whatever the case may be, you're going to end up finding, right, that what a lot of people do in the beginning of their trading journey, and I did it too, right? I did it too, I'm guilty, right, is having the urge, right, to want to trade a billion different pairs, right? There's all these different pairs. Think about all the currencies in the world, right? Why should you only trade one, right? Why should you only trade two? Okay, or why shouldn't you trade multiple pairs? Okay, so we're going to get into all of that, right? So there's two things that people need to understand when it comes to my strategy and trading in the Forex world in general, right? It's the fact that there's different concepts, and there's different markets, and there's different ways of trading those different markets, right? So since we trade the Forex market, there's two different styles of trading, right? There's binary options and there's Forex trading. What I'm primarily going to be talking about, right, on these live streams is Forex trading. Why? Because Forex is a lot more accessible to the common person to learn without losing money. And two, right, it's because on these live streams, as you've noticed, there's a delay, right? When it comes to Forex, it doesn't matter. I don't need to type in, get in the trade right now, right? You guys don't even need to take the trades that I'm going to be going over. And I'm not really going to be calling out trades. I'm just, if I happen to see a setup, right, I'm just not going to not take it because I'm live streaming, right? So I'm going to say it like that, right? So we're just going to be looking at the market with each other. Okay, and back to the pairs concept, right? So you can trade multiple pairs when you're trading a smaller time frame, right? Because of the fact that when you're trading on smaller time frames, right, you're not going for as much distance, right? You're not going for as much volume, right? So when you're doing that on a smaller time frame, right, multiple pairs are going to be moving no matter what. But if you try to time multiple pairs to see where they're going to go for the next 30 pips, 40 pips, 70 pips, you're going to have a hard time doing that, right? And especially if you're trading cross pairs, right? Like if you're trading USD JPY or you're trading Euro USD, and you're selling in both directions, you might not know that you're going opposite of yourself, right? You're betting on one trade losing and one trade winning at that point, right? So when you're trading Forex specifically, I found through my own experience, and some people disagree, right? I found that I like to trade the pair Euro USD for a couple of reasons, right? One, that it's the most liquid pair, right? Two, right, the most liquid pair meaning that there's the most amount of volume and orders and money going into this pair, right? Reason being is because the dollar, right, is the strongest currency in the world right now, and then also the euro might be the second, I don't know, right, but it's up there, right, and it has the most currency fluctuation, right, so that's why I like to trade this pair, and it moves because of the fact that there's so much liquidity in this pair. It moves very well to liquidity zones, right, and for those of you guys that don't understand liquidity zones, we'll get into that, right, but a lot of individuals that are either watching this now or that are going to be watching this in the future, a lot of you guys like to trade SPX, or a lot of you guys like to trade, you know, Japanese pairs like GBP JPY, or, you know, USD JPY, or any of those other ones, right? And I'll go into other reasons why I don't like to trade those pairs, you know, aside from the ones I just mentioned. But point being is that those pairs are less liquid, which cause a bunch of other issues to happen in your long-term trading career, right? And now the whole concept of what we're going to be talking about on these calls is not to gas you up, right, and make you think that you're going to understand trading like it's nothing, right, or to give you the false impression that trading is easy, but it's instead to help equip you, right, and prepare you for a career with longevity with day trading, right? And in order for you to have a career with longevity, right, just remember this in business or in life in general, right? You don't want to be sporadic, right? Sporadic means that you're all over the fucking place. Okay, now if you're sporadic, it means that you're not focused and that you get less data, right? And when you get less data, you make less informed decisions. Okay, so when you're less sporadic and you focus more in, again, we're talking about forex trading, not binary, right? And you focus in on a specific pair, right, preferably at a specific time, right, you'll start to recognize the patterns and the way that it moves, and you'll start to understand just the flow of how it operates more, right? And you'll get more data, which will help you make better informed decisions, right? So that's why I like Euro USD, okay? So I've been trading this pair now for probably consistently just this one pair for probably almost a year now, probably almost 12 months more or less. And that, so it's going to be a very, very simple analysis, right? Very straight to the point when it comes to most things. And then what we're going to attempt to dive in deeper on, right, with myself and in the future guest speakers, is we're going to dive in deeper into more of the fundamental side, right? Because aside from answering questions and just analyzing where current market price is at in regards to zones and, you know, psych levels or whatever, there's really not much to look at, right? And that's what a lot of people mislead in this industry is, I don't want you guys to be fucking on here. I don't want to be on here for more than an hour, typically, usually, right? We're gonna maybe depends on the day, but there's really not much to look at when it comes to chart work, right? Unless you're back testing, which we will also do at certain points, right? But now that's going to be mostly based off of you guys, right? What again am I saying that doesn't make sense? What's confusing you, or what are your questions, right? If you have a question saying, hey, I don't know how to backtest on this pair that I trade, or I'm not getting accurate data, then I will go back and show you an example of stuff, right? But now there's really not many concepts and things to go over once you learn it, right? And that's a foundational thing that you guys need to understand too for this call moving forward, is that when we do these calls on Sunday night, right, and you learn something, the point and purpose of them is to apply them Monday through Saturday, or Monday through Friday, right? And Saturday is for the lifestyle stuff, the mindset stuff, right? But it's for you to apply the information and practice it. That way you learn it, right? Something that happened, or this happens a lot, you know, not just with me, but every other time we used to run live streams, is there'd either be individuals that would get on and they'd ask the same question every week, right? And there's nothing wrong with that if you don't understand it, right? But then if you ask people, did you practice it or did you apply it, 9 times out of 10 they say no, and that's why you still have the confusion, right? So that's where, again, it boils down to taking notes and asking questions, ladies and gentlemen, right? So that's just to set the tone, okay? And then aside from the technicals, we're going to be analyzing more fundamental data and just kind of why price moves. And then aside from that, it's psychological hurdles that most common traders struggle with, right? And majority of the people on here are going to be beginners, you know what I mean? So we'll go about it like that, okay? Let me scooch my stuff over here. Let's make this tiny so I can scooch over more, right? And let me scooch myself right around here. All right, cool. So the key foundational things, right, that I like to look at when we're trading, and I'm thinking about how I should do this. We'll just analyze EU, right? We'll just analyze EU together, and then if you have questions, ask them. Like I said, if you have questions, ask them. And then if I feel like there's something important that's worth me breaking down, then I'll break it down, right? So as of this week, right? Market just opened. And last week we were in on longs. Like all fucking week we were in on longs for Euro US. And market just would not break, right? So a few things to take in consideration before we just go into a full depth analysis is what I like to do again is, since I trade the same pairs, right, and I always trade New York Open, right, I'm usually always trading and sending my messages in the Discord by like 8 to 8:30 a.m., maybe 8:45 or whatever, right, depends on the day, okay, but point being is, first thing that you got to do is just analyze what zones is the market currently in between, right? Because the trades that we lost last week, or the trades that we ended up just having to close because they weren't moving, it's still important to analyze those and see, okay, what did I do to get in on the wrong entry, or, right, what, why is the market not moving yet? Okay, so that's what we're going to kind of look at now. So market just opened. I don't really take trades on Sundays, but what we're going to do is analyze for the market tomorrow, okay? So there's a few ways to look at it, and this past couple weeks has been a little bit trippy. We'll look at it on a cleaner chart. Has been a little bit trippy for me because of, again, time frame differences, right? Time frame differences. So I had an uptrend, I had a trend line marked on the 1 hour, and I was looking at this with Kamal, actually. I don't know if he's still on the call. But I was looking at this with a friend of mine the other day, and he's a partner as well, so you guys are going to be hearing from him in the future too. And I was expecting Euro US to continue riding this uptrend, right? At least until we got to a key level, which was identified here, right? So 1.10,000, right? And that's just a psych level. It's a whole number zone, whatever you want to look it up, right? It's called psychological number theory or whole number theory, right? For those of you guys that don't understand it. But basically, to sum it up, it's just an area of high probability for liquidity and sell-off pressure or buy-in pressure. Okay, so I was expecting price to continue to push up to here, right? And then originally we were wanting to maybe look for an entry. I think I got in fucking here or something like that, honestly. And then went straight into drawdown, right? Went straight into drawdown on this trade. And then we got faked out on that one, right? So then I figured that it was still going to continue pushing up. But, right, I noticed that, okay, we made technically a lower low, right? And for those of you guys that don't know, right, the way you identify if the trend is broken or valid or continuing or whatever, it's by looking at if the market is making higher highs or higher lows, okay? And now let me move this over here. In a way that you can identify that pretty easy, right, is just hide this stuff, right? So if we were looking here, right, this is a low point, right? High point, low point, high point, low point, high point, low point, right? And then we failed to make a new high, right? We failed to make a new high, okay? And I didn't notice this at first, right? So I kind of thought, okay, it might have been an equal high, or, on the macro time frame, on a bigger time frame, it still technically wasn't a finished move yet. So I was ignoring that sign, right? And now a big thing that people need to do, right? Need to do when it comes to your tradings, and this is a mistake that I made, right? Again, it's taking into consideration the time, right? A quote, and I forgot who I heard this from, man. I would tell you guys if I knew it, right? But a quote, and it's always been a really just good quote to remember when it comes to your trading in general, right? It does not matter when you get into the trade. It matters when you're getting out of the trade, right? And I'll say that again, okay? Because it took me a little bit of time to really let that sink in and understand it, right? It does not matter where you get in on the trade. It matters where you plan to get out of the trade, okay? Because a big issue that people do is don't analyze on the wrong time frames, right? And you don't have a clear understanding of your concept of time when it comes to your strategy, right? So when it comes to me personally, right, I like to identify as a scalper or intraday trader, right? Only reason I would say intraday is because occasionally, right, I'll have trades that I might possibly have to hold for 24 to 48 hours, but that's rare, right? That's on a rare occasion, okay? So now, since I'm a scalper, and scalper means short, right? Scalping means it's a short time frame, right? if you don't understand that, I'll make a video about that in the future. I'm not gonna explain that right here, right? It's basic stuff, right? It means that you're doing a short trade. It's a short trade. Okay, so since I like to do shorter trades, right? Me analyzing stuff on, and I say this very basic stuff, right? I just make my own mistakes sometimes, though, right? I was analyzing this uptrend still on, like I said, the 4 hour or, you know, a bigger time frame, and still the 1 hour still, right? But I wasn't paying attention to smaller time frames. Like, I wasn't paying attention to that. And then if we look on a smaller time frame as well at that same point, right now, this is where I got a little bit more confused, though, okay, is because if we were to look here, right, we have the lows that we started off with, right? I'm doing the exact same thing that I did like 5 minutes ago. Now we're just doing it on a smaller time frame, right? We're doing on the 15-minute, okay? So, you know, we had the low, right? We could say this high, low, high, low, high. And then same thing, I didn't notice this one here, okay? So that, but I still kind of thought that that would have been considered this uptrend. If I put the line back on here right now, it's going to put everything else back on. Yeah, so same thing, right? I thought that we were still respecting this trend, okay? So now this is where the sell-off pressure started to actually happen, and this is where we made the real lower low compared to this actual real higher high, right? And again, I was looking at this on a smaller time frame, but it was messing with my entire, again, for this trade specifically, right? Usually I don't do this, right? So I'm explaining a little loss that we had. And again, I'm assuming that most of the people on here are people that are in the Discord, right? So you guys are seeing this. But then what actually made this sell-off pressure happen, right? So it could have been a few things, okay? And that's what we're going to see this week, right? But so a tool that you guys want to add into your arsenal, if you're not currently using it, if you're trading any pair that has USD in it, right? It's the US dollar index. Okay, I don't know why it looks like this. Hold on. I don't want to do that. I'll just add it back on here for you guys. But yeah, it's the US dollar index, right? So I'll find it right here for you guys. If you just type in DXY, I just use the first one that you find, right? This one right here. Just use the first one. Where did it go? And then we'll go into why it's an important tool to have if we can find it. Damn, why do all my candles get fucked up now? It's because I messed up my thing. Whatever, I'll fix that later. So let me add this back. So yeah, DXY, US dollar index. Okay, and so now what this is telling you guys, to sum it up, right? We're going to keep everything super simple here on these calls, okay? What this is telling you pretty much, okay, is the strength of the dollar, right? When you're trading Euro USD, right, or a USD JPY, or even GBP pairs, honestly, too, it kind of correlates still in with it. But when you're trading these, okay, obviously, right, you have the euro traded against the dollar, right? So the dollar is represented here, right? So now, whenever we were looking at these trades, right, the ones I was just showing you on right here, right, whenever we were looking at this, yeah, this is Euro USD. I can't do the replay mode. That wouldn't work. Right, basically, it was like right around here, though. It was like right around here, right? And what happened is, if you go to any news source, right? We're just gonna go to Forex Factory for this one, and then we're gonna, like I said, we'll dive more in depth into additional fundamental data in the future. But right now, we're just gonna use Forex Factory since it's simple. And we'll go back to Friday. We'll mark this up. I guess we'll do it like right around here, because I think there is News Wednesday also. This was Thursday. Okay, so on Thursday. So this was Thursday last week, right? So pretty much, if you're looking at the dollar index, right? If you guys, to sum it up, a quick version of this, okay, is if you guys use this, right? And now if you go look at the news, let me make myself smaller. Right, so this was PPI, okay, and if you guys look right here, it says actual, forecast, and then previous, okay. So we're going to look at this one. The forecast was just 0.3, okay? The actual was 0.6, right? That number is bigger than 0.3, right? So if you click on the folder, right, and you look right here, and it'll just say actual is greater than the forecast, it is good for that currency, right? So if the actual is greater than the forecast, it is good for that currency, right? So this happened Thursday at 8:30 a.m., right? So now if we go to, this is Tuesday, let this play out, Wednesday, this is, okay, still Wednesday, okay, I'm on the 15 minutes though, there we go, we're almost there, guys, right, Thursday, right around here. Thursday, 30. Okay, there we go, my bad. Okay, so right as soon as that news came out, it was positive news for the dollar, which caused the DXY to go up more, right? Where I messed up, okay, and this is what made me lose the trade initially, okay, is I thought that we were going to start getting more sell-off pressure and that we weren't going, because it keeps going up, right? But I thought that we were going to be able to cap off, right, and start looking for more sell-off pressure to reach a new low, right? Not taking other things into consideration. Again, I was just looking at messed up time frames, kind of, right? But I expected the DXY to tap out right around here and continue back down, right? And if this was to go back down, this would mean that the euro would continue back up, right? So now that did not happen. Okay, the DXY continued to go up, right, all the way up to where it's currently at right now, right? So since that happened, that pushed Euro US down even farther, right? So now what we're currently looking at, right, this is where we're bringing it back up to this current week, right? What we're currently looking at, okay, is based off of how I like to trade, right? We're gonna just analyze things. Right, so we'll come back to that. We'll come back to that. Or I'll leave it there for now, actually. Okay. So the main ways I like to trade, right? Based off of my entire analysis, I sum it up into a few concepts, right? Psych levels, which are supply and demand zones, which are support and resistance levels, which also happen to line up a lot of times with whole number theory, which I mentioned earlier, and Fibonacci's, right? And I have a certain structure that I like to use with my fibs that I'll go over. I'm not going to hide it, but you guys just need to kind of take note of that, right? So everything about my analysis kind of falls into those three concepts, and then everything else kind of flows out from there, right? So macro stuff, okay. Man, I hate my candles looking like this, but I don't want to delete all this, but I feel like it'll make it cleaner for you guys. Those are my old trades. Okay. Delete this. Delete that. Okay. So this gold zone, that's just a zone that we had marked up for a while now. And if you just want to look at it, right, the price that I have it marked up at is 8750, which is a quarter number, right? And if you just happen to look, right, heavy supply sell-off, right, rejection, breakthrough, retest, right, rejection as of right now, okay? And then if you just go back, same thing, same exact line, right, impulse area, rejection, right, rejection right here, right, straight to liquidity. So that's just a zone that the market's moved to a bunch of times, okay? So that's where we're bouncing off of right now, right? But what I did before, what still kind of makes me want to have a bullish bias on this trade, right, is if we draw our fib from high to low, okay, this lines up still with a perfect gold zone retracement, but, okay, things to take into consideration, right, is the news moving forward for this week, okay? So nothing tonight. I think it's oops. That's tomorrow, Tuesday. That's CAD. Okay, so this Wednesday we have FOMC. Yeah, okay. Honestly, it depends. I know Kamal did just send out. Well, let's go read it together. I don't know why I can't open it because I haven't done any research into the news, so we can do it together right now instead of me trying to do behind the scenes. Right, because I have seen a few data sources that have just said that price is gonna continue pushing for DXY, and then that's what we were talking about too. Um, Around to this 104 area, right? And if it goes up to that 104 area, that's gonna continue to push Euro USD down past these levels, probably back down to like this 8,500 level down here, right? And this 8,500 level has not been traded at since the beginning of the month, right? So not too long. But, so that's where it depends. Okay, so for this week, let's go see. Okay, right here. Okay. In the week to come, the FOMC meeting and U.S. flash PMI numbers for March will be the key dollar-focused event, right? But there's a lot of high-importance data events that can impact some dollar-linked assets. 5 banks will announce their latest monetary decisions, with the Bank of Japan the most interesting. Markets currently see a 40% chance that the Bank of Japan will hike rates by 10 basis points along with central bank announcements. The U.S. dollar, rallied Thursday after U.S. PPI data showed wholesale price inflation increasing. As that stands, it's unlikely that this release will overly worry the Federal Reserve, but it serves as a reminder that price pressures remain sticky in the U.S. There could also be an attempt to move higher in the DXY ahead of the FOMC meeting due to a lag of dollar movement behind short-term treasury yields rising. Okay, so stay aware of these. Okay, yeah. Okay, so we gotta stay aware. That's what we're doing now. So yeah, so price it just depends on how the news source will come out, but I guess based on how previous news sources came out, let's go look at that. That's where DXY probably will push up a little bit more, then that will cause Euro to push a little farther down, which would make this buy signal or this buy trade invalid, right? Will make the buy trade invalid. So, but if we were to adjust it to there, then that makes it perfect. Okay, so now let's go look at how. Okay, so actual forecasts. So they've been the same. So last month they were a little bit different. That's for that one. No data for that one. So we got to go to a different website for that one. I'm assuming so. Yeah, we'll go to Thursday right now too. Guess that doesn't say anything. What is this? What is this, dude? Oh, let me just close this out and reopen it. Okay, there we go. Monday, Tuesday. That's Wednesday already. That doesn't show anything. We just saw. And then Thursday. So this one. Okay. So this one's predicting too. So pretty much, honestly, that way I'll just be real with you guys. How I honestly do like to analyze these is I honestly wouldn't. So here's me, right? I want to be on here to teach you guys how this stuff would work, but then at the same time, I don't want to mislead you guys in how I do my analysis, right? Because there's two types of things, right? So, and there's two roles when it comes to that, right? So when it comes to trading, right, I don't like to overanalyze and overstimulate my mind personally, right? So now, yes, we can overstimulate and prepare for like the market data that is going to come out, but honestly, where I would sum it at, for me, right, where I would sum it out for me is, okay, if I was to get on the market right now and if I wasn't doing this call, right, if I was not doing this call, what I would do is I would look at that, I would get a look at the news, say, okay, there's not news that's going to affect me, majorly for the pair that I trade until Tuesday, possibly, right? And that's an orange folder, so I wouldn't even care about an orange folder, honestly, right? But I don't trade AUD. I only trade that if I'm trading Euro, and I don't trade CAD, and I don't trade JPY, right? And I don't trade, and like I said, I don't trade AUD, right? So for tomorrow, what I would do is say, okay, I'm aware that there is news that is coming up this week, right? I'm aware that the last time that news came out, it caused the DXY to push up a little farther, and it has not fulfilled a price yet that is worth identifying a reversal, okay? Taking that information into consideration, right? Just because I see a good little buy opportunity on Euro USD currently, that does not mean that, okay, now that market's open, that tomorrow morning at 8:30 a.m., as soon as I wake up, that now I'm just going to go long. Okay, there's other certain things that you have to take into consideration. And again, typically too, I don't really look at the market on Sundays. So we're going to start doing this together to just have a quicker analysis for you guys on Monday morning. Right? I wouldn't recommend, especially if you're new, I would not recommend you trade Sundays. Reason being is there's no volume and there's no liquidity in the market right now. Right? The market, if you were to get in a trade, you're going to be sitting in drawdown or at break even for hours. Okay? So instead, we're going to let the market do its thing. Right, and based off of what the market did last week, right, there's another way that we could look at this current structure, okay? So instead of looking for longs right here, right, like we currently have been, right, now that we have a little bit more data and a little bit more information, right, about DXY, right, we can kind of make an assumption here, right? Since I wanted this pair to initially come up to 1.10,000, right? Let's just put a little line, or let's put our crosshair right here. Let's look how far away the price or the market actually came from that area, right? 18 pips, okay? 18 pips from that major whole number zone, right? Now, that is not that big of a deal, right? 18 pips, right? When you really think about it. So even if price did not come exactly to my major whole number zone that I was anticipating it to, right? I'm not the one that drives price. And I promise you, surely that, not Shirley, like the name Shirley, but surely as heck that my lines that I draw on the screen are not pushing price, right? So if price decides to react a little early, okay, what the worst thing that you can do, right, is try to catch a falling knife, right? And now that applies for buys and sells. It's just an analogy, right? And what that means is that even though, yes, I'm wanting price to fulfill here to this 1.10,000 level, because that's the actual major whole number zone, right? Price might not do that right now, right? This could have been enough liquidity swept. This could have been enough buy orders taken. This could have been enough take profits hit, right? For the same concept of other people thinking the same way that we think. We're not the only people that think this stuff, right? Where, okay, what I'm going to do instead, let's say, for example, that a bunch of traders, right, decided to get in on this trade right here, right? And they were targeting that whole number zone too. And they thought the same thing, right? Maybe price isn't going to go up to that all the way to that number, right? So instead what we'll do is we're going to put our prices, our take profits a little bit lower, right? So that's probably why it got put out around here, right? That's why price didn't go all the way up. So what we can anticipate is that this is the completion of that whole number zone fulfillment right now. And now that we created a lower low, right, or a lower high, we can now identify a new fib structure, right? And even though this one that we're looking at before that I had just deleted right now was a macro fib, right? Again, now that I've closed my trades from last week, we're not looking at a macro time frame. I'm not trying to predict, okay, but yeah, you know, by next week the fucking market could be up here. Okay, yeah, it could, right? But now I don't want to make that same mistake that I made last week of losing my daily trade opportunities by predicting where price is going to be Friday, right? So that's, again, what matters, what I said earlier. It doesn't matter where you get in the trade. It matters where you're going to get out of the trade, right? So since I'm not predicting, even though, yes, I would ideally like to see the market come back up to 1.10,000, I'm not going to be waiting on it anymore, right? Because there's plenty of opportunities to get on trades right here, right now, right? So now that's why I'm getting at. It doesn't matter where you get in; it matters where you get out, right? Because what we can do is identify a new fib structure on a smaller time frame, right? And now the way that fibs work, right, is we're looking for two things, right? We're looking for one major thing, right? We're looking for retracements, okay? And what I mean by retracements is all Fibonacci shows you, okay, is it shows you discounted prices, right? And I'll go into a little more detail about that, right? But it shows you discounted prices for those of you guys that are wanting to take more in-depth notes, right, than the common person. Let me make this a little tighter for you guys. That way you guys can see the numbers. Okay. So, what we're measuring, right, is this impulsive move down, right? And there's two places you can put it, right, depending on the time frame again, right? You can either draw it from this high, okay? There's a few ways we could draw this here, actually. And then it's all going to be interpretation and discretion, right? That's been my word of the year so far, is the word discretion, okay? Because, and here's the thing, too. Let's take a break from the charts for a sec, right? And I want to touch up on this concept for a second, okay? Okay, because hands down, okay, this is going to be the most important thing that you're going to need to know now until the day you quit trading or you retire from trading, right? Whichever one comes first, okay? Hopefully retiring, right? But point being is for this call and every other live stream, for my course and every other course, for my videos or any other videos, for any strategy, for anything, okay? The most determining factor, the highest determining factor of your personal, individual success is one word, okay? It's discretion, okay? A thing that fucks a lot of people up, right, is trying to find a perfect cookie cutter trade setup, right? And now and we'll go into it. We'll talk about that as calls go on, you know, because we're gonna talk about gurus, right? But point being is that shit does not exist. Okay, it doesn't, right? And I'll say that right now, right? It does not exist. Okay, you can have high probability setups, okay, but you're not going to find a perfect setup every time you're looking in the market, right? And that's what messes a lot of people up, is because they'll force themselves to see shit that is not there. Okay, and one of the main reasons why I really started to become a little bit more successful with trading the past 2 years, right, is I learned, and it sounds bad, right, but then this is the thing, you know, most of you guys are already students, and if you're not a student, let's say this video is still your 20 years from now, right, I don't care if you sign up or use my strategy or not, so it doesn't matter to me to hide shit from you guys. Okay, I'm not gonna benefit from it in any way, shape, or form, right? So to be the most honest thing possible, what helped me, you know, really start profiting and really start understanding trading, right? It was by me stopping trying to learn and apply everything, okay? And me simplifying shit, right? And I dumbed trading down for me personally to a way where it just makes sense. Right? And what didn't make sense, right? And it's counter to what most people think, right? What didn't make sense was trying to find a cookie cutter setup, right? Because it seems really easy, right? All they got to do is just find this perfect setup, then I'll just take that trade and then I'll win, right? But now I had to understand that the only people that are saying that shit are people that are taking my money. Right? The market is never going to move perfectly, right? It's never going to follow your trend. It's never going to follow your Fibonacci. It's never going to follow your order block. It's not going to follow your news report analysis. It's not going to follow any of the shit that you think you have, that the advantage that you have over it, right? None of it matters, okay? All you're doing when you're taking a trade is you're just giving your most highest probability guess, right? That's all you're doing, right? And if you're right, you're right, and if you're wrong, you're wrong, right? So when it comes down to this stuff, right, everything that this is where it all starts out from. And for those of you guys that haven't seen me speak much before, right, that's how I like to talk, and that's how I think, right, is there's a topic, and it's gonna wrap around back to something with all the shit that I say, right? So the whole reason I started saying this whole spiel about discretion, okay, is because even though, right, I trade, and even though I know what I'm talking about, and even though I'm going to be, the analysis that I'm giving you is my real analysis on stuff, right, just because I'm saying something doesn't mean that it's fucking right, you know, or just because I said, oh, Ollie, or just because Ollie said that you have to draw your fib exactly like this, that this is how it needs to be drawn every single time. That's not true. Because what I'm about to show you is a bunch of different ways that this fib that we're going to draw right now could be drawn, right? And now it just depends on a couple of factors, right? Where's the money at, liquidity, and where's the bank going to push the price, right? That's what really ends up boiling down to. So if I can't find a solid answer right now, what I'm getting at, right, is that I'm not going to stress my mind and overcomplicate my life when it comes to trading by trying to figure it out right now, right? Because again, it's Sunday, or even if it was Tuesday morning, right? Whatever. Because one of the main things that you have to understand is if you feel like you need to take a trade, don't take the fucking trade, right? So what we're going to do is we're going to analyze this now, and we're just going to see what we think might happen, right? And based off of that, we'll make a trade tomorrow, right? And if it's wrong, we reanalyze, right? And we recalibrate, we refocus, and we reattack, we re-enter, okay? So that's the main word of the day, though, and word moving forward is have your own discretion, right? Do not just listen to everything that I tell you, right? Or you should listen to what I tell you. I'm not saying it like that, but what I'm trying to get at is that if you try to limit, and I said this the other day, if you try to limit the human mind to certain constructs or, you know, certain concepts or whatever, you're limiting your imagination and your ability to see things that computers can't see, right? Or pretty much to sum it up, right? So don't repeat what you have with your job already. You know what I mean? So don't repeat what you have with your job already. Your job limits your thinking and all that stuff. So don't think that there's a picture perfect cookie cutter setup, because there's not. Pretty much to sum it up, right? So there's a few ways you can draw this fib. Okay, option 1, right? And it's all about experimentation here, right? Let me read what Kamal said first. A 30% 30 move back for any impulse is considered a retracement. A 100% move is deemed a reversal. Alright. Makes sense. And then we'll show what the percentages mean, because that's all the fib shows is just showing percentages. Okay. So, option 1. Alright, let's get nice and tidy here so you guys can see here. Alright. I'm just going to do it like this. And you guys can still see me? No, whatever. Okay. So, option 1 for this fib structure, right, is we could draw it from this high to this low. Right? This low right here. And if we extend it, right, we can see this. If we broke past, so okay, what this represents. So now we'll go into what the fibs represent super fast, because I have this in the course. If you're a student and you don't know how to use fibs, go watch it in the course. Don't ask me questions until you watch it either, right? And if you're not a student, I'm going to explain it very fast, right? So the name and the purpose of fibs is in the title, right? Fibonacci retracement. Okay, so a retracement, right, is when the market goes up and it comes down a little bit and then it continues back up, right? Or the market's coming down, it goes up a little bit and then it continues back down, right? Simple terms, simple, easy to understand, right? A retracement, right? Okay, so now what this means, okay, is there's certain levels of retracement, again, based off of liquidity and discounted prices, right? So when price makes a new move, we're gonna sum it up super easy for you guys, right? When price makes a new move, okay, down, right, made a new move down, right, price is going to make a retracement back up to a certain discounted sell area, right? So now in this case, you guys can look to the right and you see these numbers, okay? These numbers represent the discount percentage, okay? So this orange area, right, this, for my terminology, is what I call it, right, is retracement zone number 1, right? This is the most expensive discount, right? This is where price is like, okay, it's at a discounted price, but it's not as much compared to these ones that we're about to mention, right? The next one is 50 and 61%. Think about it like this. Price is 50% off, okay? When you're looking at this, price is 50% off, right? If you go to a store and you see price is 50% off, it's very understandable what that means, right? So It's the 50% retracement area, right? So now we just look, right? We're going to look from this distance down to this distance, right? It's around 80, right? The number, you see how it says 79.2 right there or whatever? That's 80, right? Now, we just go halfway, right? What is that? That's 40, 50%, right? So it's an easy thing. So that's the premium discount area, right? It's called the gold zone, right? 50 to 61% off. That means, all right, bet I'm buying that. You know, I'm buying it, right? So what that means for us is that the 50 to 61% area is the highest probability area for the price to retrace to, right? So what's going to happen here is, ideally what this is saying is, now that price came down. Now let's use our replay mode, right? Price came down to here. I don't know why I haven't been using this. My bad. Okay. That's why you pay for TradingView Premium, right? You got to use it, right? So price came down all the way down to here. So this is telling us, okay, price is either going to come, it's going to do a couple things, right? Couple options here. And we still haven't even gone over the other paths of options of drawing it. Right now we're just going over what it is for those of you guys that don't understand, right? Price came down to here. Option 1, it's going to come to here. This gold, the retracement zone 1, right? Retracement zone 1, and then back down to these green lines, okay, to sum it up, right? It's going to come here and come back down. Option 2 is it's going to come up to here and come back down, okay? Now, I'll explain this very, very, very fast, right? You're more likely to lose your trade if you're here, if you sell here compared to here, okay? I'll say it again. You're more likely to lose your trade if you sell here compared to here. Just take note of that, right? It's how it is. It's how the cookie crumbles, okay? Nothing I can do about that, okay? So, and there's certain instances on where you would draw, you would aim for here over this one. And we'll go over that on a different call. I don't want to talk about that right now. Too long, right? Because we're already at an hour. Okay, and option 3, right? And I just learned this one the other day, actually, right? Shout out to Ladarian and shout out to Kamal, right? Even I learned stuff still too, right? And then there's I think it's 81%. Correct me if I'm wrong, right? But 81%, I don't have it marked up here because I don't generally trade this zone. But if you mark it up on your zone, you will notice how price reacts there, right? So the 81% area, as you can imagine, is right around in between here, right around here, right? So what we can see is we'll let price play out, and we'll see what happens, right? We came to retracement zone 1, we entered the gold zone, and we pushed past it a little bit, right? As you guys can see here, we pushed past it a little bit, right into kind of in between that 81% area, right? And this works very well with gold, is what I learned the other day too, right? But now price came up to here, and we had a massive sell-off, right? We had a massive sell-off that happened after that, right? So you could have taken your sell entry here, right? Which is what I should have done last week, right? Because we're analyzing this now on the what's happening right now, not what's going to be happening 5 days from now, okay? So based off of that, right, that's option 1. And we could consider this one true because it looks like it's moving pretty good with this, right? And then now what would happen based off of this, right? Price came down, fulfilled the retracement, right? Broke straight through take profit 1, which is back to the 0%. Hit take profit 2. Retraced back to here. And now we're probably going to go back down to take profit 3, right? Which is right around 8,500, which is what we talked about earlier in the call. For those of you guys that remember that, we were talking about that's where price potentially might go. Damn, my camera's lagging right now. Can you guys still see me? Let me check the chat. I feel like I froze. Shout out to Fortnite Instant, bro. Super proud of you, man. But can you guys let me know if you can see me? Or hear me still? Alright, fuck it. We'll turn the camera off. Whatever. Okay, so to continue back here. Now we're just here. Yeah, dude, I'm still in the same problem. It's when I'm running this. I don't have like a professional PC yet, and then it sucks, dude. My Wi-Fi here sucks. Whatever. Okay. So yeah. So price can go back down. What was I saying? Oh yeah, back to 8,500. That's what I was saying earlier. Right. So that's option one for this fib. Right. So that's how complex this one option could be. Okay. So this is option one. Right. Was down to here. Right. Now option two. Right. Could be this. Right. On the bigger time frame. Right, is that we had this impulsive move, very fast impulsive move, and now prices kind of could push up a little bit longer. And now this was ideally my Friday trade, right? The trade that I took on Friday, this was my ideal analysis, right? That we would go up, we could catch a few pips, 20 to 30 pips right here to fill in this liquidity gap that's right here. As you guys can see, there's a big, just massive sell-off, right? That means that there's still buying pressure right here, which is also honestly me. Because I was fucking holding my trade, not wanting to close it. So that there's other people in the world doing that too, right? So now there's probably still orders set here. So I'm imagining possibility two is that price can come up anywhere to around here and then continue back down, right? But now the determining factor then when it comes to this is what? What happens here, right? What happens with the DXY, right? What happens with the news that comes out this week, right? That's what everything boils down to at the end of the day, right? Because now if we look here, this fib, that's not even input. This is an old fib. But here's, I'll just show you guys this example really quick though. I drew this one months ago, or weeks ago, however long this was, right? But same thing. We drew it from this high down to this low, right? So we went boom, boom. Where did price come back to? Right? Retracement zone number 1. Right? Take profit 1. Take profit 2 was hit. Same exact thing. Same exact shit that we just said. Right? Then retrace back to take profit 1. Then take profit 2. Retrace back again. Consolidates. Whatever. And then, as you can see, though, then price eventually came all the way back down and fulfilled take profit 4 on this DXY guide. So even though it's not take profit, it's just price targets, right? So it really all just depends, guys. That's where it's like the main thing is that it all just depends on the possibilities of where the market could go, right? On where, that's really what it all boils down to, is where it could go. We do not know, right? So the highest probability thing, right, is based off of this. What I am going to base this off of, right, is this. This is what I think is going to happen, right? So you guys can quote me. We'll draw it. Boom. Boom. Okay. Now you guys tell me based off the information that I just told you, where do you think price is probably going? Turn the camera off again. But to answer your question, probably going to come here. Maybe consolidate a little bit Monday and Tuesday, right? Which is fine. We'll catch some daily pips. And then take profit 2. Maybe back down again. Who knows? And then back up to this 104 area. If not up to here, at least probably around here, right? At least around here. Okay, around to this area. Because again, if you chase an exact line or an exact price, you're probably not going to win too many trades, right? You got to look at everything in zones, right? So if you identify things in zones, we don't need to say, okay, we need to get to right here. We can maybe get to right here, or anywhere around here. We might push up a little bit, who knows? Okay, but based off of this analysis that this new fib structure could possibly be coming into play, it all really just depends, guys, because it is confusing, because then we could do this. But again, time frames matter here, guys, time frames. Because you could go boom, you could do something scary like this, right? And then this would be telling us we're in prime sell-off area for DXY, right? But if this was to happen, that means some shit's happening. You know what I mean? If the dollar was to start going down to this extent to down here, there's some shit going on, guys. But look how fast it's been going down, right? So then that's where it's still important to be kind of tied in with economics and things like that.
because this could be a very potential option, right? But now, if that still was the case, right, we're only in retracement zone 1 still, and price still could push up to the gold zone, which would still keep our option 1 that we just marked up, this one, valid, because then that means price still might come to this area. That's all this is. It's an area of interest, ladies and gentlemen, right? It's an area of interest, okay? Now, we know this is an area of interest, right? Again, we can go back to the pair we like to trade. Euro USD, right? So, if we think that this is going to keep going up a little bit more, maybe it'll consolidate, right? Maybe it'll do this, whatever, right? But we think it's going to go up a little bit more. That would still give us a sell-off bias for Euro USD, guys. Sell-off bias is what this whole handy-dandy conversation is going to boil down to, guys. But now, so again, it depends. If we draw it here, the Fibonacci was fulfilled. The retracement was fulfilled. If we draw it down here, the Fibonacci has not been fulfilled yet, ladies and gentlemen. The fib structure has not been fulfilled yet. So it could push up, or it could just tank. But either way, based off of that information, I would say that I think selling pressure is liable. I'm not going to tell you guys to start selling, but selling pressure is a possibility. It's a possibility, and just based off of that, right? So I know I went over all the place, right? But it's because if I was to just sit here, like 99% of trader educators do, or, you know, gurus do, if I was to just sit here and tell you guys, yeah, Euro USD is going to for sure 100% go up, buy it, right? Or it's for sure going to go down, sell it. You know, I'm no better than the person that scammed me when I first got started. You know what I mean? So I've been there, and you guys, that's a misleading way, right? The way that you guys can start doing this analysis yourself is by being patient and learning how to analyze it to the best extent of the way that I do, right? And now, again, discretion with what I say, okay? Because when I say do it how I do it, I'm not saying it because I'm the best trader in the world, right? I think I'm pretty good, and if I, you know, I'm gonna be making lots of money one day, right? We're making decent money right now, but one day we'll be rolling in the ends. We'll say it like that, right? But point being is that I'm not saying you just listen to me and do exactly what I'm telling you to do and follow exactly what I'm telling you to do because of the fact that I, you know, am the best, but it's because of the fact that you don't know anything, right? Whether you're a student in Cashflow, whether you're a person on YouTube randomly watching this, or whatever, right? You're watching this because you don't know what you're doing, right? So that's the whole concept you got to understand. So if you were, so that's where I started back to the beginning, is when I said you just have to not overcomplicate your process, right? So the way that you don't overcomplicate your process is now if you're, let's say you like the way I teach and you like the way I talk and my strategy makes sense to you, stop listening to other people, right? Stop trying to learn this guy's stuff now. Stop trying to learn her stuff now, right? Stop trying to mix in this strategy with that strategy, right? Because the problem, again, is that you don't know anything yet, right? So imagine it like this. It's like it's like taking a newborn baby that just got spit out, right? And now you raise it a little bit, right? You raise it a little bit, and it's preschool time, and you send it into preschool, okay? And now after 1 week, your preschool teacher comes and starts telling you, oh, you should go to kindergarten. You know, you need to go to kindergarten, right? If your kid doesn't go to kindergarten, your kid's not gonna, you're gonna have a bad kid, right? So then you start sending your kid to kindergarten because you think that's how they're gonna learn, that's how they're gonna grow. They need this in order to be successful, right? And then very soon you're gonna find out that someone in kindergarten is gonna tell you need to go to first grade, right? But the whole concept of what I'm saying is that you're skipping, right? You're skipping processes and key foundational concepts, right, that have nothing to do with the chart, okay? And that's why you don't have money. That's why, that's why you don't have money. That's why you don't have a successful trading portfolio or a successful track record when it comes to trading, right? Because you're inconsistent. Okay, I'll see somebody that signs up for Cashflow, or I'll see somebody sign up for another program, and it's vice versa either way. Because me and other mentors in the industry, I keep tabs on them, and some of them that are cool, I talk to them, right? So now, when it boils it down, I'll have someone that joined. I'll use me, so that way I don't talk about other people, right? I'll have someone that joins Cashflow, and I give them a set of instructions, right? And a week later, they're asking me a question about something that I know is not inside of those instructions yet, right? Or they ask a question that is completely irrelevant to anything that I talk about in the program, right? And now the only way you can do that is if your eyes are everywhere, right? And if your eyes are everywhere, it means your eyes are not focused on the prize, right? And the only way you can make any sort of progress when it comes to trading or business or life or personal development or whatever, ladies and gentlemen, okay, is consistency in doing the shit you do not feel like doing, right? And so let's get into that. What are the things that you don't feel like doing? And then we're going to close the call off so that way you guys can do it this week, right? So the things that I know most people do not like to do, okay, when it boils down to trading a strategy consistently, and this is why you don't trade it consistently, right? It's because when you start getting a little confused, right, instead of asking questions, or instead of writing your questions down, or instead of engaging with other people that might know more than you, right, you get frustrated, and you decide that this doesn't work too much, and you need to try something else that might be better, right? And then that's where you go to Google, and that's where you go to YouTube, or that's where you go to Baby Pips, and you start trying to learn other shit, right? And then what happens is you only do that for 2 weeks, or you'll only do that for 3 weeks, or a month, and then you figure out that that's even harder now because now you have even less foundation, and you'll just bounce around, right, for months, okay? And for the people that really are on this call to become successful with trading, the only thing that you really need, dude, okay, is consistency. Just give it a year. Just give it a year, right? If you're going to learn from Cashflow, learn from Cashflow for a year. But not like half-assed for a year, right? Because there's a difference between half-assing and actually doing it, right? Or if you're going to decide to go learn from whoever, right? Do it for an entire year, okay? If you're going to go join someone else, don't talk to me anymore, right? And I'm not saying that in a bad way, but I'm saying that because it's distracting to you, right? The less you distract yourself, the less options you give yourself, right? The more streamlined your energy and your focus can be, right? You can't say that this strategy doesn't work if you haven't traded it for a fucking year. You don't have the information to. You don't have the data. You don't have the experience to say that it doesn't work, right? If you've been trading for 3 months and you're not profitable yet, you haven't done anything. You don't know anything yet, right? You're literally you just got spit out, right? You just got spit out of the womb, okay? So now that's where I'll end off the conversation with this. The things that people avoid doing, right, is just staying consistent in very simple things, right? It's very simple. Practicing by back testing. Aside from that, it's asking questions on the information you got from practicing and back testing. Okay? How do you back test and practice? This one's a hard one. By fucking trading. Excuse my language, guys. Excuse my language. But by trading. Okay? A big thing that you guys do is you'll, and it's okay, I did it too. And I say all this stuff because I did it too, right? A big thing is you'll learn, but you're scared to actually trade. You're scared to trade, right? Whether it's with your real money or demo account or trading your full percentage. I know some people that have been trading for months, years, and they're still only trading 0.5% on their account, but the account's like $1,000. You know, they're more than that, like $10,000 or whatever. But point being is, if you have to set the right goals and the right foundation and understand that when you do that, it's just practice and consistency, right? That's really everything that boils down to, right? So we'll see what happens when it comes to Euro USD this week. And we'll follow up on next week's call, right? Obviously, if you're in Cashflow, we're going to be doing daily updates on this pair. If you're not in Cashflow, then hit me up to join Cashflow, right? I don't know what you're doing, right? Or if you're not in Cashflow and you want to get into trading, right? And you don't trust me, or you don't want to work with me, or whatever, right? go work with someone else, please. Right? Please, I encourage you. Right? Go work with someone else, but start trading. Right? You have to start trading. Right? If you've been curious about trading for years, just start doing it. Right? Just start doing it. Right? There's enough information. Right? You'll learn it as you go. Okay? That's the whole thing. You learn everything as you go. Don't try to learn every concept. Don't try to learn every strategy. Don't try to learn from every guru. Don't try and compare guru. Don't do any of it. You just got to learn how to trade. And again, how do you learn how to trade? You got to just do it. Okay? And now I'm going to do my best on these free calls to help everybody that I can learn my strategy the best I can teach it in an hour, hour and a half. Right? But now for everyone else, okay, you're in Cashflow. And you gotta ask your damn questions, right? A lot of times I'll see you guys in the Discord, or you guys will message me. Something simple that I talked about the day before or something, for example. But it's because you're not paying attention, you're not plugging in, right? So the more you plug in, the easier it will become for you, okay? And if you're not plugged in, get plugged into me or get plugged into somebody else, right? Getting a mentor will be the best decision you could ever do, right? Lose your ego and listen to someone that knows more than you, right? Yes, I'm a young person. There's people that are way younger than me, making way more money than me. So drop the ego, get a mentor. I have plenty of mentors, right? Right now, I'm paying a lot of money right now for a mentor, almost $4,000 fucking dollars a month for the mentor that I have right now, okay? But it's to get me to the next level. But now here's the thing: if I don't listen to that person, right? If I don't do what that person's telling me to do, right? If I don't follow that person's advice, okay, and I don't grow or I don't make any money, is it my fault or is it my mentor's fault? So, you know your stuff for this week, ladies and gentlemen, okay? So, we're looking at EU. I trade EU. I like psych levels, fibs, whole number theory, and we're going to be breaking down EU and other psychological things as the week goes on. So if you guys have any questions, right, my Instagram is at Ollie Cashflow, Cashflow INV as well, whatever you guys want. But with that, guys, we might add in more calls as these calls go out, but my main goal is to really start getting these Sunday night calls moving, so make sure you invite your friends next week. These are going to be completely free, right? Make sure you practice throughout this week. And you ask questions, right? Again, it's the only thing you got to do. Don't overthink it. Don't overcomplicate it, guys. And then come back next week with questions, and I'll answer them, right? So we're going to just dive in deeper as we go on. But I just want to say I appreciate you guys for taking an hour and 48 minutes out of your Sunday night to get on here. And some of you guys might have heard stuff you already knew, right? Some of you guys might have learned new concepts. Some of you guys might have, had a terrible time. I don't know. But point is, I just want to say thank you, right? And I'm excited to help as many of you guys as I can, right? But again, it all boils down to, I don't want you in these freaking calls if you're not going to pay attention, if you're not going to take notes, and if you're not going to apply the information, right? More importantly, I don't want to waste your time. I don't want to be known as a time waster. I want to be known as a life changer and a difference maker, ladies and gentlemen, right? So with that, we're going to end the call, right? Shout me out online. Go join Cashflow if you aren't already. If you need anything, let me know. And if you're in Cashflow, I'll see you guys in the Discord. And if you're not in Cashflow, I'll see you guys at the top because the bottom is way too crowded, guys. Peace.